sentiment is so bad, but fundamentals continue to improve. We're at max competition between AI and crypto. AI and its agents are going to be using crypto more than ever before. It takes one catalyst, and then this market shifts. Now, their boards are asking them, what are you doing in crypto? 24/7 markets, global markets, that is the future.
In this interview, Chris Perkins explains why crypto may be in a stronger position than it looks in the markets. Bitcoin is red, sentiment is terrible, and AI has stolen the spotlight. But institutions are still flooding in, and Franklin Templeton is building for the next wave. If you want to understand what can bring capital back into crypto, watch this interview. Speaking of predictions,
Oh no.
I found an article from December where you made predictions for 2026. Now, you're on the money on a fair few things. You M&A summer. I think there's pretty good evidence that we have seen that. You are some of the evidence yourself. You did make a price prediction for Bitcoin and Ether that if I were a worse journalist, perhaps I would beat you with. But do you remember what you predicted?
Not off the top of my head, but I know it was pretty big.
It was. So Bitcoin you had at 150K and Ether at 5K.
Okay, so we're still live.
So, well, I don't think that's that far-fetched. A lot of people believe that if we're stuck to the 4-year cycle,
yeah,
then around October we're going to start to see things pick back up. So do you think that's still on the cards?
So we've seen a lot of volatility this year, and volatility works in both directions. Am I going to be wrong? Yes, I'm definitely going to be wrong, unless I get really lucky. Predictions are that for a reason. But we're halfway through the year. We've seen very violent price moves, and we've seen catalysts hit crypto markets and really cause a lot of volatility. Sometimes that happens on the way down. Ukraine war, for example, and other idiosyncratic factors, hacks, things like that. But that volatility works in both directions. And one thing that you're always one catalyst away from it going the other direction. So something like the Clarity Act could be pretty material. Could you see, right now, the U.S. government's going around strategically investing in national security investments, rare earths. Looks like they're going to do something in AI. It's not too far-fetched that the U.S. government may do something in crypto at some point because they think it's a national security imperative. And I'm not, I don't mean to speculate that that's going to happen or not, but anything is possible. But my point is that it takes one catalyst, and then this market shifts. And all that, hot ball of retail money that's in AI right now, it can pivot back. And by the time it pivots back, you have that institutional building as well. You have the AI agents coming on the scene. So anything goes in this price. Very, very difficult market to trade, but perhaps a better environment to invest. So, it's still early. We should have this conversation again in December. Maybe I'll be in a better spot. Maybe I won't, but I don't know. Let's let it ride.
Now, I want to talk about the markets right now. I guess it's conflicting. When you see crypto, everything's bleeding and red, and I've got my home studio, I've got a ticker behind me that has Bitcoin, Ethereum stuff. It's just constantly, it's been red for months. I haven't seen it. I haven't seen a green pixel on that thing.
Yeah.
God knows how long. But then the S&P 500 is obviously, it hit all-time highs.
Yeah.
Where did this disparity come from, and why do you think there's such a gap right now?
So it's really interesting. A lot of that equity action has been a function of AI. And people are chasing the shiny new toy. That risk capital is moving into AI. I personally think this is a temporary phenomena. And you're kind of in this weird position right now, this weird temporary position. We're at max competition between AI and crypto. But when you step back for a second, these are very, very symbiotic technologies that are going to accelerate each other. And why do I say that they're competitive right now? Because risk capital is going after AI and the IPOs, et cetera. You're also seeing AI uncover vulnerabilities in some of our crypto projects. And when you see vulnerabilities, confidence lags. And when confidence lags, people are like I said earlier, I'm not getting paid for that risk. I'll underwrite the fundamentals, but I didn't think about hacking. Again, this is temporary because as those vulnerabilities are being discovered, they're being solved. DeFi is hardening before our eyes. That's accelerating very fast, right? And so ultimately you're going to be in a position where AI and its agents are going to be using crypto more than ever before, because it's trustless, it's permissionless. They can really avail themselves when it comes to payments and the financialization. So these technologies are going to accelerate each other. Right now, there's this little like interim period, but ultimately, once all the vulnerabilities are solved, what else is there to do? And it's going to really restore that confidence more than ever. So it's a temporary phenomena. You've had some macro things coming into place as well, but I feel, when you step back, if you're tough market to trade for sure, but long term, I feel really good. It's hard not to.
You've got a pretty rich TradFi background. Is there anything you think that some of TradFi doesn't really get about crypto?
So remember, you got in 2017. Back then, it was really the blockchain, not Bitcoin era.
Yeah.
Right? And in a way, we're seeing that come full circle right now, where in between that, we went through DeFi summer, people got all hyped up on tokens, we had Memecoins, we had DeFi summer. But now as institutions are coming in, there's still a lot of focus on blockchain, not Bitcoin. And I think that's the cycle we're in, that max cycle. I don't think a lot of them understand the value in tokens themselves. And in fact, I have some people say, hey, Chris, why the heck would I ever invest in a token? Like when I can invest in an equity? And it kind of like blows my mind, because I'm like, guy, the fact is that tokens are wrappers, equities are wrappers. What matters are the fundamentals underneath. And frankly, what we're seeing in this market right now, cross market structure, crypto or traditional, is we're seeing what I like to call electronification 2.0, right? And that's what tokens deliver. A long time ago, I come from the futures industry, as you mentioned, people traded in the pits. There's just fat, smelly guys would raise their hands and bid an offer. And then overnight, that market really transitioned to electronic markets, right? Where do we go from electronic markets? We go to tokenization, which is like electronification 2.0. 24/7 markets, global markets, that is the future. And a lot of folks, have to get used to that environment. Now again, tokens are just wrappers. I can wrap technology, I can wrap energy, or I can wrap an equity, but it's this tokenization that's going to be the major unlock for this era. And the question is, why now, right? Sentiment's really bad, but we're seeing fundamentals improve, and we're actually seeing institutions move forward. And this is just another example of institutional adoption. In this case, it's in the investment management space. And when you really step back and you think about the business model of asset management, it's a business of scale. And so what I'm coming in to do, and by the way, Franklin Templeton is not new to crypto. They've been in this space since 2018, right?
They upset a lot of people with the Bitcoin eyes. Do you remember?
Upset who? I thought it was awesome.
No, I loved it.
Right? But these are folks, from Jenny Johnson, who's the CEO, to Sandy Collin down, they are mission focused. In fact, Jenny Johnson came up the ranks through the tech side of things. So she's red-pilled, and now she's looking for us to really execute on this vision, which is, I want to position Franklin Crypto as the leading active asset manager in the world. And around the world, if you look at her and her business model, she has clients everywhere, and they're saying, gosh, I need to be in this space. A couple of years ago, it was like, oh my God, I don't want to be in that space. There's too much risk. There's too much reputational risk, regulatory risk. Now, their boards are asking them, what are you doing in crypto? And the answer is, maybe I need to find a partner, somebody who understands both traditional and crypto native to navigate this complex new world. And it's a really exciting new world. I mean, markets are turning into 24/7 in real time. Who has that expertise? The crypto folks do. And so now we'll be able to navigate across the firm and across our clients, the complexities of this new environment. This is an exciting environment, frankly.
I think there was a parallel between the dot-com bubble and a few things that have happened in crypto. And one of them was NFTs, right? Where the dot-com bubble, it was ridiculous and people were paying absurd amounts of money for domain names and then it popped. But I think the mistake that a lot of people make with bubbles, and I'm preaching to the choir here, I'm sure, but there's often underlying value. There's just a load of hype over the top of it, and when you pop it back down, you'll start to see the value again. And the dot-com bubble was an example of that. And I've always felt that NFTs were an example of that. Like selling JPEGs for millions of dollars wasn't sustainable, but it's not like the tech wasn't useful. And in your prediction article, the article about your predictions, you mentioned that NFTs might come back as a completely different instrument.
Yeah.
Do you remember what you said? And do you
I remember, yeah, sure. Let's start with meme coins, because meme coins are very similar. And did meme coins have utility? Not intrinsic value, for sure. And we saw that crazy meme coin era. But you know what? They did something pretty amazing. And what they did was they stressed blockchains. And if you look at a Solana, in order to handle that flow, it really had to scale. And so as you fast forward to today, it has massive throughput ability, and a lot of meme coins help facilitate that because they traded so violently. When you look at NFTs, again, they were a proof point of technology, starting with JPEGs, but it was really not a non-fungible token. What does that mean? When you step back and you think about crypto and like, what's the big picture here with all of crypto? It allows you to put private property into the internet for the first time. And none of us had that previous. You barely even own your own URL or whatever, domain name, right? But this was an example of us taking something so basic, a JPEG, and claiming provenance over it on the internet. Big deal. And it's non-fungible, meaning it's unique. Tokenization is now coming into play. We're seeing fungible tokens like equities, but why can't you start seeing non-fungible financial products like structured products and other things? So again, the technology had to be proved first, like a meme coin enabled that trading velocity. NFTs showed that you could put unique property, unique assets into the internet. So I do think it's the beginning, and I don't think they're dead yet.
For the rest of 2026, what are you looking at? What sort of areas are interesting to you right now? And the audience, what should they be looking at?
Man, there's so many things going on. For me, I'm going to be focusing on building my new initiative. Working with clients around the world, helping explain and educate. But from an investment perspective, there's a couple of very defining technologies that are coming together that you can't ignore. It's crypto, it's AI, and it's quantum. And these technologies are accelerating each other. You've got space going on, you've got robotics. And so how do they all come together? Again, I don't think they're competing. I think they're gonna accelerate each other across the board. And so I'm really interested at looking along those fault lines to see where the value emerges. And then from an investment perspective, we're actually kind of getting back to core principles. It's about the fundamentals. It's about the value accrual. And as these markets converge, super exciting time to be in them. And I couldn't be more excited.
I love that. Chris, that was a pleasure.
Rob, thank you so much, sir.
For coming on.
Really appreciate it.